everyone, we're here today to talk about the long-awaited leasing standard that is effective for 2022. So Emily, tell us what is changing.
All leases will now be reported on the balance sheet as assets and liabilities. You will need to calculate the present value of the future payments in order to determine your assets and your liabilities.
So what about the income statement? Is there anything changing there?
There's actually little impact to the income statement. Your operating leases will still be shown as lease or rent expense, and financing leases will still have interest expense. However, financing leases will now be amortized instead of depreciated like capital leases were. Claudia, can you talk about what qualifies as a lease?
Sure. Under the new standard ASC 842, a lease is defined as a contract or part of a contract that conveys the right to control the use of identified property, plant, or equipment, which is like an identified asset, for a period of time in exchange for consideration. So one of the key words there is identified. It applies to physical assets without the right of substitution.
Oh, that is definitely helpful for helping folks try to understand what is actually eligible. One thing I find really interesting is if you are issuing comparative statements for this compliance matter, you are allowed to not restate the prior year. So the two balance sheets would look completely different, which is a little awkward, but 2022 would be under the new standard with leases on the balance sheet, and 2021 would not have leases. Or if you would prefer, you could restate the prior year and then they would look more similar. And it's just a lot to think about and it's a lot to change.
It really is some decisions to be made there. And, people, they can have single year statements, and they should also research whether the users of the financial statements will allow departure from generally accepted accounting principles, because if we can do a gap departure, that's the most simplistic way to deal with this new standard. And we really think from our conversations with banks and bonding companies, some of the users don't even want to see leases on the balance sheet.
Oh gosh, I could not agree more. Now is the time to start those conversations with your CPA and users of those financial statements to see if that is a possibility, because it could save so much time. It could really help with that comparative financial statement presentation. Next week, look for us to get more in depth on some of the research you can start doing now to calculate the lease impact for the balance sheet and those sneaky hidden leases.
Yeah, embedded leases, those are sneaky agreements that disguise themselves so you didn't even realize that you had a leased asset.
Look for the next video in our 4-part series and an invitation to our leasing webinar on September 22nd.